ForexDayBreak podcast.
Good morning and welcome to episode 99. Forex pairs in this episode are EURUSD, non-farm payroll released today, what will be the outcome for this pair, dollar yen, we have seen a reversal and can expect more upside, and pound yen, same here, a corrective phase has started and more upside is coming. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Minus 29 degrees Celsius we have today here in southern Finland. So quite cold. When I went in my morning walk, it was quite chilly. Not very nice weather to take a morning walk on, but I have to admit that it will wake you up. So today we have the NFP release from US, and of course, as the Federal Reserve has promised or said that they would be raising interest rates more this year, I think these non-farm payrolls and other employment data is very anticipated, because in my opinion these are the numbers that most of the market participants look at when they think or try to anticipate when the next rate hike will be. And I think there's going to be a debate soon about that time or the schedule when they are going to raise rates. In my opinion, they are not going to raise rates anymore. They are going to lower the rates when the jobs data start to reflect the other data that has come out of United States for the past year. I would say the data has been very bad, diminishing all the time. The only exception is the non-farm payroll and other employment data, which is usually a lagging indicator, a lagging statistics, because when the economy starts to turn down, there is not immediate firings going on in businesses. They try to hold their employees as long as they can and only fire them when it's absolutely necessary. So I think the jobs data will turn down at some point. Maybe this jobs number we have today, or will be released today, will be quite strong. The price structure in EURUSD is supporting this view, and we can go deeper into that. So this is EURUSD for our chart. So yesterday we had quite a strong move upside, quite a swift, maybe 150 pip move approximately yesterday. We traded maybe half of this move. The volatility was quite high at some point during the London session and also during the US session. So I closed my trades manually. We had our take profit level. I think it was, let's actually see what it was exactly. It was 109 flat. So 109 was our take profit. This was reached. Price now 108.85. In my opinion, we have now completed triangle. We almost touched the upper trend line, upper part of the trend line on this triangle. Or actually this is forming a channel now. Not so much of a triangle, but I have labeled it as triangle formation, corrective wave 4. And if this triangle is indeed completed, next larger move can be expected to be to the downside. And I have a trade reflecting this expectation. So EURUSD sell stop at 108.74, stop loss 109.25, take profit 107.3. That's our trade today for EURUSD. And of course the NFP number is going to be the big move for today. My expectation is that it's going to be strong for dollar and we can see a downside move on EURUSD. Of course there's potential upside also. There is no violation in the Elliott wave principle if we get a move higher. Only exception is the 110.87 level. Let's mark it here. So this label 110.87 is the low of the minute wave 1 of this large 5-way structure. So we are now forming or have formed and completed a minute wave 4. This triangle that in my opinion is now completed marks the end of the corrective wave 4, and now we can expect a large move to the downside, eventually making a new midterm low below 105.2 and maybe even 104.6 will be broken when this minute wave 5 starts to form. So I'm expecting a positive move for the dollar out of this NFP release. I have a trade waiting and I'm expecting this trade to trigger sooner than later, and once the non-farm payrolls are released, then hopefully we can see a move to the downside and then get some pips out of this trade. Of course these large anticipated news releases are very hard to predict, hard to forecast what will be the move on the market. Sometimes there's a very large move straight onto some direction, straight onto one direction. Sometimes there is a whiplash up and down. Sometimes there's very small muted reaction. So very hard to say in advance in my opinion. But the price structure, Elliott wave structure in this pair is proposing that we can expect a positive outcome for the US dollar out of this non-farm payroll. Alright, let's move on to dollar yen. We have a trade set up here as well. Dollar yen is forming a large triangle which has just completed a wave C or C leg of this triangle. We can see it down here, so C of C of C wave, you see, is down here. We have large 3-wave structure ABC which forms further smaller 3-wave structures which have been labeled on the chart ABC, ABC. Lower trend line of the triangle sits around 117.5 and next large move should be to the upside. This supports the view that we should get a positive outcome for the dollar out of this non-farm payroll release today, and we should see a move towards 123 even. Eventually we have a trade a little bit more conservative, so we have a buy stop at 118.31, stop loss 117.6, take profit 120.5. This is our trade for a dollar yen today. This has been quite difficult to analyze recently. I tried to make out of this pair and just recently figured out or jumped into conclusion that we are dealing with a triangle. So we can zoom out a little bit, see this whole structure. Of course there is potential of more downside since this is a C leg and there's only 2 legs on the lower part of the triangle. The upper part of this triangle is more clear. We can see that there is multiple touches on the upper resistance level and this forms the upper part of the triangle quite nicely, but the lower part is more difficult to say that if we have already reached it or if there is going to be more downside. on this triangle. The price action is looking more bullish than bearish in my opinion. So if we zoom back in, we can see that there is a very strong upwards move yesterday, or actually today, made in dollar yen. And this is very strong signal that we have reached the bottom and we can expect the next large move to be to the upside. Of course, this can be also a little bit misleading. We have had quite volatile days on this week. The year has started quite volatile. There's a lot of problems in US stock market. Also China stock market is crashing down. So this increased volatility can be misleading if there's large moves. This can be interpreted as reversals when they are not. This was one of the reasons I closed my trades yesterday. The increased volatility was giving quite unpredictable signals for me, so I decided to close the trade before getting any large losses. Also, the day before had been a day of losses, so maybe I was a little bit too careful, but anyway, the outcome was that we made, I think, 160 pips yesterday, so a good outcome. There's a little bit more to be made, but still I'm satisfied of this result. So back to US dollar Japanese yen. The increased volatility can give mixed signals and can be a little bit misleading. But as of now, the price action looks bullish. The correlation between dollar yen and EURUSD supports the view that we should expect more dollar strength next. All right, let's see one other pair, pound yen. We have also entered trade here, which has actually already triggered. So the trade is pound yen buy stop at 173.2, stop loss 172.12, take profit 176.7. So this has already been triggered. So I think this can be entered. So make your own judgment if you want to enter this trade or not. It has been already triggered. So the expectation here is that we are forming a minute wave for correction. There's a strong correlation between this pair and dollar yen. And also the price structure, the wave structure supports that we can expect a correction next. We have a 5-way structure from the 186.32 high, which marks the end of the second wave. And since the minute wave 2, the second wave correction was a triangle, so a sideways type correction, we can maybe expect a sharper correction out of this fourth wave. So we can draw it here. Here we can see a triangle which forms the minute wave 2 correction that ended in 186.32. Then we can see a 5-way structure to the downside, quite a strong one compared to the first one. And now I have labeled this as completed minute wave 3. And now we can expect a sharp corrective move, and maybe towards the previous fourth wave, which is also a Fibonacci expansion level. So there is quite high probability that we can expect this fourth wave correction to reach towards those levels. So we have a quite more conservative stop take profit level in this pair, but this can possibly travel all the way up to the fourth wave. There's also quite strong support level here, if you can see it in the chart. So this level here has acted first as support, then as resistance, and this is very important level, 161.8% Fibonacci expansion, which has measured, I have measured this before this decline. So a relationship between the first wave and the third wave. Third wave has now traveled quite a bit more than this 161.8%, but this level still has importance on the coming price action. So we can maybe expect a sharp correction all the way up to 178.9, around those levels. Our stop loss, our take profit is at 176.7. But let's see if we get a sharp move out of this. Maybe we will move our levels a little bit. But these two things support the view that we should get more upside on this pair. So a correlation to dollar yen and this completed 5-wave structure, and the expectation that we should get a correction next. Also, the view that it should be a sharp correction is the guideline of alternation. So when we have a sideways correction on the wave 2 position, we can expect a sharp correction in a wave 4 position. This is the guideline of alternation in Elliott wave principle. So these 3 trades today. Let's see what comes out of the NFP release later today. Okay, that's all for today. Show notes at ForexDayBreak.com/99. See you next week.
ForexDayBreak.com.